On today's show, 3 questions. Number 1, what do you need to know about rare earth metals? Number 2, is it time for 2 cents to restart the government? And number 3, are 401ks less favorable next year? Let's go.
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are. Just the two of us. Just the two of us. Sorry, Michelle. Just Rabih and I today. There's a reason why. A couple of reasons why. The most important reason why is Rabih. I am off to a Disney cruise tomorrow. So by the time you listen to this, I will be on my Disney cruise with my kids.
Having a drink with Mickey Mouse.
Yeah, exactly. Very excited. But I also want to say, we're just gonna give everyone a little peek behind our conversations, because you got me all warm and fuzzy with this one. We were talking last week about this, and I'm like, hey man, we got to move this, or you said we got to move 2 cents, and I said, oh, you guys could just do it without me. And Rabih, what did you say?
I will never do 2 cents without you, man.
I was like, oh, it makes you feel so nice. It's so warm and fuzzy. The other reason is we are in the middle of year-end reviews with clients, so it's really difficult to pull any other advisor. I don't do anything here, so I was just like, yeah, I'll do 2 cents. I got nothing else going on. So it was hard to get another
the CEO.
Yeah, hard to get another advisor on. So it's just Rabih and I. We'll see. We scrounged together a few topics here. First one being, Rabih, what do you need to know about rare earth metals? I think we're starting off with the last couple of weeks we've been speaking. So you've been making me speak some different languages. This week, I think you wanted me to try to pronounce some of these words, some of these rare earth metals.
Yeah.
Are we starting there?
Yeah, I honestly couldn't really try at all to pronounce them. So I want you to read actually the middle line. And the middle line, those are metals used in the MRI scanners. Just for people to know.
The middle one. Okay, here we go. Holmium. Yep. It's like my homium.
Yep.
Rabih, you're my homium. And then gadolinium. I freaking nailed that, I think I got it.
Okay.
Holmium and gadolinium.
Could you say the last one, and do you know what's used for?
The last one is ytterbium. Ytterbium? Ytterbium. It looks like you fell asleep on your keyboard and you hit it and just typed out a bunch of letters.
This thing, the word that you said, is actually used in portable X-ray machine. Yeah, that is used in portable X-ray machines, and the other is neodymium, which is what we use for magnets, right? So a lot of they're earth metals. This is what they are. And if you did not check your phone over the weekend for some reason, this is all what the economic data markets news channels are talking about. So I promise this is not a chemistry lesson. This is all the hard words that we're gonna go through. But
this is step 1: make Matt look stupid for not being able to speak other languages and say hard words. And then step 2 is actually educate people on what's happening. Yes, I love this.
Honestly, I couldn't even attempt step 1. So kudos for you to put
Perfect. I'll go for it. I have no shame.
Okay, so let me just give you a small, timeline of what happened. So we all start on the same, page before we get politically heated, pointing fingers on who started the fight between Trump and Xi, right? So let's start with that one. I think one of the triggers is on October 3rd, President Trump was exploring to get 8% stake in Greenland rare earth projects, which are, run by American companies. The administration was trying to get 8% in critical metals corp in Greenland, which holds the 10 Breeze rare earth deposit, whatever. And it's a push to trying to diversify away from China. So trying to diversify away supply chain from China is not new. It happened the moment the world figured out that, hey, if COVID happens again, all of our supply chains are vulnerable and we need to try to diversify.
Too much risk
from the Chinese perspective, this is bad because they had a monopoly in supply chains. So they would try to, lessen this up. So then what happened is that on October 6th, the administration announced that it holds stakes in multiple public firms, including the rare earth producers. On October 9th, China decided to tighten its export control. So China expanded its export control regime targeting defense and semiconductor users. New rules require exporters to obtain licenses. Foreign companies using Chinese origin materials may also face export restrictions. So it's not like, hey, you can't export. But now if you want to, export anything out of China that has 0.1% of its size, of its volume or weight, rare earth metals, you have to wait until you get like approval, like stamped on that you can ship it out. And China, for political reasons, has been delaying those approvals and has been delaying
they feel it slipping, like their power and monopoly slipping, basically.
Probably.
Yeah.
And this obviously, move, it's a chess move, as this is the size of it, really bothered the president, unsurprisingly. So what happened is that the president threatened massive tariffs on October 10 earlier in the day.
It
And
seems
later
so
on the
unlike
day,
him. It
so
doesn't.
unlike him.
Yeah.
And then later on the day, on Friday, he decided to impose 100% tariffs on Chinese goods starting November 1st or possibly sooner, on top of whatever they are paying. So if there's something that they're already paying 50% tariff on, now it's 150%, which, supposed to halt trade altogether.
Put it on my tab.
Put it on my tab. And the markets did not like it. S&P fell around 2.7%. NASDAQ fell around 3.6%. Dow 1.2%. Like across the board, the market did not like it that less business is going to be made just because they are fighting over tariffs. And on top of that, the president and, the two presidents are supposed to be meeting at the end of this month in Korea. And that meeting is now in limbo because of that. Tick for tack type of attitude. The market today has been trying to, start brushing off the fears, but it is nonetheless a risk. So I thought this is what happened, right? Do you think I missed anything? Is that the story that you know?
I think you nailed it.
Okay. So this is what has happened. And I'm like, okay, are they fighting for like a whole farm or a couple eggs? Like, how important are those rare earth metals? Like, let's we did not hear about this for a long time until I think the first time it started making the news was when Trump was negotiating a deal with Ukraine, where part of the deal is like, you want us to help you, give us your rare earth metals, right? And before that, we really did not hear of those beforehand.
Yeah,
so,
how important are these? I mean, are we talking like toilet paper during COVID, or are we talking about something way less important? Because that's what I'm worried about.
Okay, so let me give you the numbers, right? And you'll decide if they're important or not. Those are actually used a lot for military usage. And the main part of them, why they are all important, is for batteries and magnets in very simple terms. Batteries for EV, anything that, runs, and then magnets, usually defense and wind turbines. But wind turbines are not a priority for this administration. But these magnets are so important because they can withstand heat. They are naturally made magnets. They're not manufactured. The problem with manufactured magnets is that if you expose them to heat, they lose their magnetism. You need something that can withstand and is there and is lightweight as a material. This is part of the reason. So let's look. I got you global distribution of resources and production data that tells us what was in 2023 the amount of rare earth metals mined and what we think the preserves are. By the way, one note on these, according to what I've been researching, they are not rare because they do not exist. Like if you dig, you'll find them. The problem with them is that they are so costly to find,
to get out,
and to refine. This is why they make them rare. It's the economics that is making them rare, not the fact that they do not exist in Earth. They exist in Earth.
Got it.
So, okay, in 2023, there was 350 kilotons produced of rare earth metals. 240 of that 350 was produced by China. 70%.
Yeah.
70% of all the production was produced in China. Second in line is the US with only 43 kilotons. So we're talking probably only 20% of what China is able to produce is produced in the US. And so China supplies 70% of the global mined earth ore. But the problem is those 43 that the US extracted from the ground, it had to send them to China
To be
because
refined?
China controls 90% of the refining. And this is the problem. Because it controls 90% of the refining, even if you produce in the US and you send them there, according to this export thing that China just created, they have to wait for approval to ship it back.
Oh, yeah.
You see where the contention happens and why
Yeah.
they're fighting. And then you've got Australia, Brazil, etc. But this tells you the magnitude of it. And then in terms of reserves, right now it seems like the world has like reserves, aka that you can access. Out of the 110 million tons, which is 110,000 kilotons of reserves, China owns 44 million tons of those, and the US only holds 1.8 million tons. So also in terms of reserves, the US doesn't have anything. And in terms of permanent magnet manufacturing, which I think the main pain point why the US really needs those is that China produces 93% of all those permanent magnets that are used in defense. So in that sense, yes, the US is seen as a very clear disadvantage when it comes to rare earth metals. They don't have them, and what they have has to be shipped out for refining, and it depends on China, which, is a big deal. This is kind of reminding me of 1970s when the US was not fracking yet and is not the main oil supplier. And, 1970 crisis happened. There's an oil embargo, and then everyone is standing in lines on the gas station simply because we're not self-sufficient with it, and people wanted to play a card against the US. This could be it. Like, this could be another one. And you start wondering, like, why isn't the US already, a leader in that field?
Well, that's what I was going to ask it's just too costly to start refining elsewhere? Because if we're saying, you say we're calling it rare earth metals, but it sounds like when you get into it, it's really, these are just expensive earth metals. It's not like that they're actually rare, it's just they're really pricey. So do we rely heavily on China for the refinement because of the level of investment it would take to do that is just way too costly?
Yeah, this is the difference between the US and China, economically speaking. In the US, we're not going to produce anything if it does not make us money. And for China, they've been building those huge mines, etc., way before we thought these rare earth metals actually were needed. Like, the technological advancement only happened in the last, 5 years, when like Tesla proved that EVs are going to be so needed. And now with, AIs that are saying the reason this is related to AI because you need fans to cool the data centers, and fans have magnets in them, right? So only now it's like they've been investing in those rare earth metals unprofitably. As a government, the private sector wouldn't want to touch them. They're unprofitable. But now, due to, how technology has been evolving, suddenly they have a value and they have a monopoly over it. So, and in that sense, you'd start asking, like, why wasn't the US, on track and like competing with China on these? I do not know if it's like negligence or if it's just like the US, they weren't a priority and they now just started becoming a priority because of technology. But I think the present step of trying to take stakes on these companies is a step towards the goal of being self-sufficient on rare earth metals, which bother China.
Yeah, and I guess to be fair on how do we not see this coming is you can't account for every single risk that's out there. Like, you probably just an idea of like priorities, but this only became glaringly risky when COVID hit.
Mm-hmm.
Right? Like, that's where it was like, holy cow, we cannot. I mean, there has always been comments. There's always been like somewhat political narrative on this when it comes to like campaigns. If I remember correctly, I remember during one of the debates between Obama and Mitt Romney back in the day, I guess not that long ago, there was talk of this kind of stuff. It was mainly used as like political rhetoric, as opposed to being like, we need to make an actual investment, like infrastructure investment change on this. Until then COVID happened, and then it was like, holy cow, this is actually like a massive risk. Yeah. So now we're playing reactive, and to your point, it's probably really, really expensive to actually pull this off, our reliance on them in this.
True, but it does not mean it can't be done, right?
Yeah.
There has been 2 past disputes and resolutions that, as precedents, we can look at them. The first one was 2012-2014, which I think why it was a political rhetoric back then with the Obama-Romney debate. There was a dispute between China's export quotas and like the World Trade Organization. That's back when the US believed in the WTO, just like to put it between quotations. In 2012, the US, European Union, and Japan combined filed a case at the WTO challenging China's export duties and quotas on rare earth, tungsten, and molybdenum. I don't know. One
Oh
of these
yeah,
first letters.
molybdenum. Yeah, I know that one well.
You know it, right?
Totally.
WTA panel found that those quotas and export duties violated the U.S. GATT, if you remember, like the GATT, the trade agreement before, all the new trade agreements that showed up. And the argument was that the United States argued that the quotas artificially increased global prices and forced U.S. manufacturers to pay up to 3 times more than Chinese firms. So at that point, the U.S. did not mind that China was making them. They just wanted fair price access to them. But I think in 2010, something happened between China and Japan that really mimics what might be happening now, and how Japan came out of it could be a story for the US. There was a maritime dispute in 2010 in September between China and Japan. China reportedly halted rare earth exports to Japan. U.S. Secretary of State at that time, Hillary Clinton, said that this episode is a wake-up call and urged diversification. Japan responded by reducing its reliance on Chinese rare earth elements from 90% in 2010 to 58% within a decade. So like a big improvement in just a decade of investments, right? The government agency called Japan Organization for Metals and Energy Security invested in overseas mines, financed development of new materials, promoted recycling, and supported domestic magnet manufacturing. Japan's experience shows that long-term investment and supply chain diversification can mitigate coercive leverage. So it is a story. They are, battling over it, and it's a thing on the negotiation. It's not going to break the US. It is a risk, but it's not going to break the US. If the US can figure out a way and invest for the next decade, this is going to be a thing of the past, just like oil prices are a thing of the past, because now the US is the largest producer and has a huge reserve, right? This is the idea, you live and you learn type of thing.
Yeah, and the fact of the matter is, like it or not, the US has far more cards to play than any other country in the world. So when it comes to, far more chips, far more cards, whatever, like we have far more chips on the table or in our reserves, whatever analogy.
I was talking about AI chips.
Oh, I said cards, you said chips. I was like, call it whatever you want, Rabih. No, but we have a lot more leverage in other areas of the world that we can pull. Yep. So I think that's probably part of the reason too. Call it exceptionalism, call it arrogance, whatever you want. The fact is the US is in a different position than every other country in the world when it comes to global relations with any country. So now you were saying the cards we have to play would be chips. Tell us more, Rabih. I thought you were talking about poker chips.
No. But it seems like, especially with what has been happening with like offshoring and changing supply chains, isn't only related to rare earth metals. Like when COVID happened and when China was attacking Hong Kong, etc., there were concerns in the US that, hey, Taiwan, as the largest chip manufacturer due to TSMC, the company, is now posing a national security risk. So they were investing, whether it was Biden investing in Intel during the I forgot what the act was called, the Inflation Reduction Act, right? Investing in Intel in the US and in IBM in the US to create their own chips, or whether now with Trump saying, hey, TSMC, you have to pledge that you're going to create factories that produces the chips here in the US. You're a Taiwanese company, but we want you to do foreign direct investment in the US. So it's not political. It's a matter of national security. We want to bring that forward. So the US, in terms of leading chip manufacturing and the power of its AI innovation, is something that China wants and they want to buy. And the US, just like China, has been trying to restrict export of that technology. So they will have stuff to, trade going forward. And all of this is related. Given that they were meeting, they wanted to have stuff they could trade on the table. So I think, it is what it is. Whatever the market is making really is de-anchored and doesn't make sense, because what really matters is what is going to be the outcome of that meeting, not what they start threatening each other with before the meeting, if the meeting happens. And at that point, you could react. So whatever's happening in the market right now is really one of the few cases where it's clearly seen as noise.
Yeah. By the way, that was called the CHIPS Act. So
Oh, the CHIPS Act,
yeah,
not Inflation Reduction. Okay.
they really were, again, the people whoever names these acts in Congress, or whoever has that job, they deserve a raise. What is actually it's the CHIPS and Science Act. CHIPS incentives. What does it stand for? Hang on, because CHIPS is all caps. It is an acronym, my guy. It is an acronym.
It's
and I
always
have
an
to know.
acronym.
Always an acronym, and I need to know. Dang it. What is it called? I keep finding CHIPS and Science Act, but
Creating helpful incentives to produce semiconductors for America Act.
oh my gosh, there it is. There it is. It's better than I could have ever imagined. I'm telling you, give that person or that team a raise.
Honestly, my only question is like, is it a boomer or a Gen Z who's writing these? This is the question.
Yeah, my guess is Michelle will tell us, I'm sure. Okay, well, you told me to give you a time check. How are we feeling, Rabih? We feeling good on that rare earth metals discussion?
Yeah. Let's leave it here. Let's wait until they meet and we see. It is a risk. This is the summary. It is a risk, but it is not something that's going to break the economy.
Yeah.
Moving on.
Okay. Moving on. Okay, Rabih, is it time to have 2 cents step in and just restart the government and get this thing going? I wonder if it is time. What do you think?
Let me check my schedule.
Okay. I mean, we've broken strikes multiple times. It seems like we bring things up on this show and then something positive happens. So I think we're just, I guess, the main purpose of bringing this up, we're now, as of this recording, on day, 13, I believe, of the shutdown. By the time you hear this, hopefully it's all done. We've got it back on track. This will be a little bit delayed by the time it comes out, but no, this is actually selfish, Rabih. I'm flying tomorrow. I've been checking quite a bit of like, what are the delays with TSA and for air traffic controllers, and are there going to be issues? But as I was doing some research on this before we went on, I came across something that's even a bigger deal, Rabih. The Smithsonian National Zoo closed while this is down. And most importantly, the Panda Cam has gone offline. They're no longer, there's a camera apparently that films.
We're talking about the Smithsonian in DC, right?
Yes. It shut down, and the Panda Cam is now offline. If that isn't enough to get this thing going again, I don't know what is.
Honestly, they're very cute pandas. I had the chance to see them early in this year, and I have like 5 minutes of like footing video before they took me out.
I believe it. I got down a rabbit hole on YouTube of watching pandas and zookeepers wrestling? Yes, I have. They did want to clarify, though, the animals there will still be fed and cared for during the shutdown. Well,
because they are on a loan from China.
exactly.
So that would
let the pandas die.
Be a bigger international scandal than the rare earth metals.
Than the rare earth metals. I agree. So anyway, we're on day 13 again. Hopefully, this is coming to an end.
Do you feel like it's going to be resolved soon, without getting political?
Yes, I do. I actually do. I think there is enough pressure being put on. I think now that we are hopefully, I shouldn't say beyond, but now that we've had this massive story come to light and they've got some at least movement towards resolution on Israel and Gaza, I think all attention will now shift to getting this done.
Okay.
I'm just guessing.
We're hoping a foreign win will translate to a domestic win. Hopefully.
Yeah, I hope so. Okay. I really do. I think the power of the narrative is gonna put pressure enough on both sides. Again, nope, we are not gonna do anything political here, but I do have confidence that in the next short term, I'll say 2 weeks or less, they get this thing figured out. You know what? I'll say a week or less. I bet they get this done by the time I'm back from my trip.
All right.
What do you say? Should we call it?
Time will tell. I honestly do not know, but the track record says that the first Trump administration, had a 34-day government shutdown, which broke all records. In the Biden administration, we did not get any government shutdowns, although the consistency of the House and the Senate was very similar to what we have now. It's, one party is winning, but only by a small amount of votes, and they were able to work together. So I do not see a reason why it should not be resolved, but the history has been that, the rhetoric of this administration is more aggressive, and it might face resistance. We'll see. I
Yeah.
honestly do not know, but I'm neutral. I'm 50-50.
Yeah, I truly don't, and depending on which side you're on of the aisle, the one side will blame the other, and vice versa. I truly do not know enough about it to speak on like what needs to happen to get this done, other than just coming together and signing whatever bill needs to be signed to get it going. One thing I will say, I don't think this is too crazy to say, because this is on both sides. The fact that they allow Congress members to be paid during a shutdown, but no other government workers, that to me is pretty wild. Like, how is that even a thing? It's like, well, what's their incentive to get the personal incentive to get it back going if you're still getting paid? That just doesn't make much sense. But that is as far as we will go politically. Again, we just wanted to bring this up to say we want to start the clock. 2 cents is officially stepping in, Rabih.
And we're giving them a week before we intervene.
We're going to give them a week, and then I'm going to start sending out some Facebook messages. I think things are going to get real.
Angry tweets. Okay.
Angry tweets, angry Facebook messages. You do not want to see me on Facebook. You see me on Facebook, and it's going to be a problem. So,
that's funny.
Okay, that was all we had. Is we just wanted to really start the clock to restart the government. But no, I will add this one more thing. I did find this is for you, Rabih. The Bureau. So I was trying to figure out like what is still going to be like working versus not. Again, my personal selfish reasons. I'm trying to figure out what's happening with flights and all that. But I did come across a couple of things, including the Panda Cam going down. That made me sad. But the Bureau of Labor Statistics said it will publish a delayed September CPI report this month to allow this year's Social Security cost of living adjustment to be calculated. So I know you're happy about that. There's still going to be some data coming out. 2 cents loves that. The union representing Centers for Disease Control, the CDC, workers said it would fight what it called the illegal firing of hundreds of workers. So there's obviously still battling there going on. And then, of course, the one thing, too, this has kind of made headlines as well, that Trump has said over the weekend that his administration has found a way to pay the troops during the shutdown. I think they're using Pentagon funds to actually pay the military, which I think we can all say is probably a good thing. Let's keep the military paid, I would guess. And then, of course, the Panda Cam. So anything else on this, Rabih? I think we're feeling good about getting the government running again.
Yeah, I'm more concerned about economic data coming in, because the way the market has been behaving right now is that it's been going sideways unless there's a news and adjust for it. So previously, before the shutdown, we had a trend in economic data, and the market has been following that trend, right? And now it's been going sideways because there's no data. So when the data comes back, if the data is going sideways, I do not think the market would react. But if the trend continued, we would see a readjustment. And if the trend reversed, which what we are worried about, because the trend was the economy is doing better than we initially thought, the market would react and to adjust. When that happens, I hope people would not freak out, regardless of the move up and down. It's like, for my friends who listen to this, do not text me, hey, why is the market up or why is the market down? It's readjusting for information that we did not have in this information crunching machine called the stock market beforehand. So when data start released, and I think it's a good idea that, we're going to get the CPI and probably we're going to get one report instead of them just coming in all at once, because it's an information crunching machine. This is what it is. It might jam it. The market will move up and down. And the problem is people easily access their stocks right now and react to something that should dissipate with time. Once, the market digests those information, we should go back to a very efficient functioning market.
Yeah. And as we all know, the whole point of this show is you shouldn't be making any investment decisions probably based on outside noise anyway. Most of this is outside noise as it is. So okay, so the government's taking a breath. Hopefully, by the time I'm back from my trip, I can come back and gloat that I was right, that 2 cents decided to restart the government. Okay, last topic. Are 401ks less tax favorable next year? This is a small little thing, but I do think worth bringing up, and we'll talk about it probably again, and we're certainly talking to clients about it. With the Secure Act, that was the Secure Act 2.0, that was signed or, officially enacted in 2022. There was a bunch of, not a ton of changes, to be honest. There was some changes, but a lot of it was just keeping it kind of a lot of the stuff in place. But one of the things that from that act that is now in place starting in 2026 that will impact a lot of dentists out there with 401ks In fact, most dentists that are
Mhm.
that are of this age. So to take a quick step back, when it comes to 401ks, there are a couple of different ways to fund them. So if you're an associate, there's really going to be the way that you can fund it is as employee. So you make a tax deferred contribution, an income deferred contribution. You're deferring some income, putting in your 401k. There's two kind of buckets that can go into either pre-tax or it can go in Roth after tax. And then the other way to fund that is your employer, right? The owner doc and that company or that practice matching for you, and then maybe doing profit sharing. As a practice owner, you are both employee and employer. You play both sides of that. So you can put in your contribution, you can match from your business. And then again, the third way is profit sharing if that becomes something you do. When you reach certain ages, the government has said you can put in more money. So this is called a catch-up contribution. So the age of 50 is when the government has said, hey, we'll let you put in more to catch up on your retirement contributions. I think it's a great rule. I would love it if they did more. If they allowed you to put even more in. So at the age of 50, for 2025, you can put in an additional $7,500 into your 401k beyond the original 23,500. So $30,000 as a 50-year-old or older practice owner or employee associate. As of now, and by the way, one of the things that changed in the Secure Act as well, tell me how this makes sense, Rabih. From the age of 60 to 63, why they picked those ages, I don't know. But from the ages of 60 to 63, they have jumped. That limit, actually, the catch-up limit goes to 11,250 for those 3 years.
But when you're 60, you can already start taking out money from that
You
401k, right?
You can. So you can take it out penalty free, but you can also catch up even more. And that goes to even a bigger amount of money you can put in. So up to this point, those contributions, those catch up contributions could go in pre-tax or after tax, meaning you could get a deduction for them or you could put them in Roth, the Roth bucket of your 401k, not take the deduction on the front end and then it grows tax free. That'd be the advantage. 2026, starting next year, if you make more than $145,000 the previous year,
Mhm.
so if in 2025 you made over $145,000, in 2026 you no longer have the choice to deduct those catch-up contributions. Catch-up contribution has to go in the Roth bucket. What say ye, Rabih?
And those catch-up contributions are for those, not the 60 plus. It's the 50 plus
50
and the
plus.
60 plus.
Yes. So if you are over, so if you are listening, you're over the age of 50 in 2026. You have to be turning 50 in 2026. You are now at catch-up contribution level, or you are now eligible for catch-up contributions. If you're 60 plus, right, you can do even more. But if you're over 50 next year, 50 or older, you can do your 23,500. That's up even more next year. You can do a catch-up contribution. The catch-up contribution portion of your contribution as an employee is now no longer eligible to be pre-tax contribution. So meaning you can no longer take that deduction. It has to go in Roth.
It seems like they gave you in some sense and they took from you in another sense, right? The fact that they allowed you to increase, to contribute even more after 60 in Roth terms, it just tells you, hey, you're over 60. Here's a broker, because it's a 401k that you can take from at that point. It's very similar to a tax-free brokerage account. Just put your money in. If you're over 60, put money in, and now we allowed you to put even more and you can take them tax-free. So they gave you that. But what they took from you is that, hey, if you were going to contribute anything over the 23K after the age of 50, those have to be taxed.
Yep.
You have to pay taxes on that. So I think
if you make over this amount of money.
Right. If you make over, right. Yeah. Even if you make it. So do you think, I think it's a fair trade-off. I like the idea of having a tax-free brokerage account after you're 60.
Yeah, for sure. For me, I think it's probably, again, things like this are not major deal breakers. It's like, this falls into the bucket of like optimization, right? It's like we're optimizing for little details. In some ways, I don't love that it for especially the dentists that we interact with a lot, higher earners, like we're trying to take advantage of any tax deferral or tax deductions we can to reduce taxable income in your highest income earning years. So I don't love that part of it from like an optimization standpoint. But one thing I will say is there's something to be said of like, it just takes the guesswork out of it. Like it's just forcing you, like you have your pre-tax bucket, which is going to be your main contribution. You've got your Roth bucket, which is your catch-up contribution. And then you can still do profit sharing on top of that if you're a practice owner. Like we are huge proponents of trying to what we'd call like asset location, like locate your assets in diversified buckets that have different tax consequences to give yourself maximum flexibility in the future. So I kind of do like in some ways that it's just taken the guesswork out of it. It's just like, if you make over that money and you're over the age of 50 and you're doing catch up, you're going to start filling up a Roth bucket in your 401k. Yes, it's going to be a little bit less favorable for you in tax in these earning years, but not a bad thing overall. It's actually could end up in the long run being better for you. It's forcing you to fill your Roth bucket, which I like. So a win, a neutral at the very least, a fair trade-off. We'll call it.
Here's what's going on my mind. If it stays there, it's a win. If this is more of, hey, let's start, especially the 60 plus type of contribution, if this is more of, hey, we're paving the way to increase the retirement age or the access age from 59 to something later, a couple of years down the road, just because the fiscal situation of the government isn't doing well, then I'm worried. Like, is this creeping in slowly without us noticing?
Yeah, it's a good point. And that could very well be it, Rabih. They could very well be setting the stage, and maybe that's the arbitrary date or ages of 60 to 63. Maybe they're going to push it from 59 and a half to 62 and a half. Yeah. I wouldn't be shocked. I mean, I think it's only inevitable. And this is pure guess, by the way, of like Social Security changes coming with Social Security in regards to whether it be the income, the FICA wage or they keep pushing out when you can actually, what's full retirement age and all that kind of stuff. That's just going to continue. To your point, it could be the same thing when it comes to this. Maybe this is them setting the stage for an age change of when you can pull that money out. That actually makes a lot of sense as to why they would have picked that age. So
yeah, like it's very arbitrary to say 60.
Very arbitrary.
63. Yeah.
Yeah. More to come. Once we know, we'll talk about it. So overall, not a horrible thing. Starting next year, like certainly talk to your advisor, talk to your CPA. Something to keep an eye on if you're over the age of 50 next year, from a tax perspective. Just something to keep an eye on. But again, this would never. I can say this. I think I can say this. This would not be the reason I would tell a dentist to not do a catch-up contribution. Like there might be other reasons, cash flow or otherwise, but this would not be a reason to not do it. I would say absolutely still do your catch-up contribution if it fits within your overall plan, even if it's not going to reduce your tax liability. Speaking of, let's just do really quick. We're just going to use this easy math. 2,500, let's say you're in the highest tax bracket. What is this actually going to cost you this year? So highest tax bracket being 37%. We'll just go with the Fed for now. So it would have said that $7,500 contribution would have saved you about $2,800 in taxes. So again, it's meaningful. It's not
over 10 years, right?
Yeah. And then on the other side of it, that money then grows tax free. So there is an argument to be made there. But yeah, that's a lot of Chipotle burritos. Like I'm totally with you.
It is. And actually, we talked about the side of increasing to 63 and what that number means, but also removing tax deductions on catch-up contributions above a certain, salary income and bringing it back down to 50. This is a way for the government to raise money.
Yep.
They are forcing you to pay taxes on 10 years where you could have avoided paying taxes, but it's only on the catch-up contribution above a certain, like it's not as major. If they decided to say, hey, any contribution in a 401k whatsoever, point blank, after 50 should be post-tax, then it's a much bigger conversation. But, this is a small money grab that you're not supposed to notice type of thing.
Yeah, exactly. And again, still favorable for you in the long run because you still have a bucket of money that will then not be like, as that money grows, let's say you did it from 50 to 70 or 60 or 55 or 65, whatever, that bucket of money, that Roth money that if invested properly has grown quite a bit. And now that bucket and that growth is not going to be taxed. So it still is it's not all negative. It actually ends up being a good thing overall. So, okay, Rabih, that was a lot. Mm-hmm. We somehow still find a way to yap. And if you're still here listening, we love you as well. You're one of the cool ones. Thank you for being here and for listening. Rabih, any other final words of wisdom you want to share? for the people.
No, I'm really looking forward to give us the post-Disney cruise report, because your last Disney experience wasn't as
Not great.
butterfly.
Not
So
great.
I'm really looking forward for that one.
I'm excited. I'm going to say this. Expectations are high, which could be a problem.
Okay.
Like I'm going in with high expectations. Thanks to Kelsey, you know who you are. She's really, really got me going and got me excited. And so I'm looking forward to it. I'm very excited. A 5-hour flight with a 4 and a 6-year-old. Buckle up, Rabih. But I'm excited for it. So I will report back. I will have a full analysis ready to go for you when I'm back from my trip next week.
Can't wait.
Okay. For now, if you are out there listening and you want to talk to us, you're sitting there thinking, man, I really need to get my crap together with my finances, and I've needed to for a long time. I'm tired of making random acts of finance and not having a good handle on my stuff. We're here to help at Dentist Advisors. You can go to dentistadvisors.com, click on the book free consultation button, and we want to hear your story. We want to talk to you. We help dentists from all over the country with their finances and track their progress towards wealth becoming optional as soon as possible. So definitely would like to talk to you. Go to dentistadvisors.com. For now, Rabih, thanks for being here, sharing your wisdom. Everyone, thanks for listening. That was our 2 cents. Till next time. Bye-bye.